Welcome everybody to this week's Teaching Thursday. We're going to talk about a great topic in that we've always mentioned, whether it's in our podcast or other videos, and that is the term portfolio.
And I ain't got no investment portfolio.
So what is a portfolio? A portfolio is simply all of your assets comprised together and all that it entails. So for the stock market side, it's more so going to be any stocks, bonds, mutual funds, any kind of investments like that you own in regards to financial securities. But your portfolio on a larger scale is actually anything that you own that has a value or an asset. So, your home is part of your portfolio, or any rental properties are going to be part of your portfolio. But we're going to focus on the security side. So for teaching purposes, a portfolio will be equivalent to a record label. So let's use Empire. We like to use Empire. It's what's popping right now. So Empire has musicians and they also have other entities. But say when you look at the musicians, they have women, they have men, they have hip hop, and they have R&B. So therefore their portfolio is comprised of different entities, which makes it diverse.
Light bulb.
Hence the term diversify or diversifying your portfolio. They want to make sure that they hit all angles because they want to maximize their investment. And if one thing isn't doing too well, something else can come in and recoup or pick up the gains. Now, also, if you think about it, Empire has entities like, shoes, bottled water, clubs, whatever you can think of. So they're expanding outside of the music side. They're expanding or diversifying their portfolio even more. And that's exactly what a portfolio is. It's just everything that you own and anything that's going to appreciate. So that's why, an asset, they appreciate, they increase in value. So everything that they have is going to be a part of their brand to diversify their portfolio. Now, if you've heard us mention this term before, that's exactly what it's referring to. Now we're going to talk about who can have a portfolio as well as where can you find a portfolio. Well, pretty much anyone that's an investor is going to have a portfolio, and it really starts in, if you buy your first home, like technically your portfolio has started by then. But as regards to the stock market investing, your portfolio is going to comprise of, stocks, bonds, and, all those entities that we've mentioned before. And as long as you're an investor purchasing those items, you are the person that owns the portfolio. Now, you can have a manager run your portfolio, such as with mutual funds or hedge fund managers, but technically the portfolio is yours, so the power is in your hands. Now, where can you find your portfolio? Pretty much for the stock market, it's going to be with a brokerage firm, as we've mentioned before. So your E-Trade, Fidelity, TD Ameritrade, that's where your portfolio is going to be. That's where you can track all of your information. And there's actually some great apps out there for some of these companies. You can have it right at your fingertips. You can check your portfolio right on your lunch break. Now, where can you rebalance your portfolio? Rebalance simply means just kind of assessing it, see how it's doing, what's doing well, what's doing not so well, and then trying to shift some certain things out to make it perform even better. That's considered a rebalance, and that's basically you can do that, at any time. Any time that you can buy and sell any of the investments that we've mentioned before is when you can actually rebalance your portfolio and try to improve on a daily basis. Now, some people consider the day traders, you could say they rebalance almost every single day, even though they're more so looking for that immediate short-term gain as opposed to like a long-term investment. The rebalance is really associated with that long-term investment because you're going to hold something for a while, you're going to assess it, maybe every month, 2 months, however your frequency is, and then you're going to rebalance or reassociate things, move some things in, move some things out. Now, how do you know how well your portfolio is doing? You can simply just check it every day. You can see what stocks are doing well. You can, listen to programs like CNBC or Bloomberg. Check your portfolio on your phone app or go on the website. You can just see how the stocks are doing on an everyday basis to see how your portfolio is doing. Now, if you're in for the long haul, you don't necessarily have to check every day. You can check it at a frequency that is set for you. Maybe if you want to treat your portfolio as a business, you can check it every 3 months or every quarter, just how these corporations release their earnings every three months. So, it just all depends on how you want to do it, but that's how you can evaluate if it's doing well or not. Now, lastly, of course, why is a portfolio important? It's important because you don't want to put all your eggs in one basket. You want to make sure everything is fairly spread out, that you have several different investments so you can grow in different areas. We mentioned about being aggressive and conservative. Well, if you're aggressive, you're going to be highly invested into like the stock market. Things can fluctuate highly quickly. But if you're more conservative, you're going to have more things in the bonds market, because bonds, they don't really shift. They're considered that fixed income because you get that interest or that coupon that we mentioned in the bonds video. And it's just it's almost like a dividend where it's that income investing. So bonds they don't fluctuate as much, or they're not as volatile as stocks are. So when someone says, are you aggressive with your portfolio? Are you conservative? Are you moderately aggressive? These are the things that you factor in. So an aggressive would consider to be maybe something like 100% stocks. As conservative would be something like 100% bonds. And then anything that's moderately conservative, moderately aggressive, moderate is going to be somewhere in between, and it's going to be a mixture. And that's why portfolio is important, because it allows you to diversify and have these different investment entities to grow your income and grow your cash flow for now as well as for in the future. We hope that this video on portfolio has been highly helpful to you. We know we've thrown that term out quite a few times, particularly in the podcast, and we just hope that this video was able to help you really understand what a portfolio is, where you can find them, how they work, and why they are even important. A portfolio is just extremely important, and we hope that the video helped, as well as help you to understand what diversifying your portfolio means, just like Empire.